Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, June 18th, the day before tomorrow's Juneteenth bank holiday. So be careful today because yesterday we had a really huge trend and rally on both S&P and Nasdaq, and today we got a little bit of concerning data that we are going to review, but most importantly, it's a virtual Friday because tomorrow is bank holiday and we are in rollover week for the futures, and also on the real Friday we are going to see millions of options expiration on the quadruple witching day. So be really careful today and the rest of the week because things are getting tricky and very difficult to trade. Today we got retail sales and they came way lower than expected. From the 0.2, let's first get attention to this previous revised from 0. So revised down from 0 to minus 0.2, revised down from 0.2 to minus 0.1, and revised down from 3 to 2.7. So 3 revisions down, and also on the actual numbers, we are getting lower than the consensus, lower in the negative for excluding autos, and year over year 2.3%. So this is a step in the right direction for inflation battle, but it's a miss when you want the market to go up, because bad news are actually right now bad news, and this is starting to go this way instead of bad news is good news. If we check the FedWatch tool, we can see this push on the cut for the September from 50 to 61.7%. And this is concerning because the markets are starting to feel the pressure on the retail sales, and more than that, on the growth, because basically markets are a growth machine. More manufacturing production way higher than expected, and this is good for the economy. Industrial production 0.9 coming from 0 and expected 0.3, and a lot of Feds 1, 2, 3, 1, 2, and I mean there's a lot of volatility due to the Feds speaking, but they are not saying anything new. They want to be driven by data. They want to decide meeting after meeting, and they still see inflation too high, but we have to see more data coming in. And last thing I would like to comment, 20-year bond auction just came in at 1 p.m. with way lower yield than expected than the previous one, and the bid to cover was actually 2.74, and that's pretty good. That's why we are seeing a little bit of push higher on the equities due to the demand on this bond auction. But apart from that, the economic data is one thing, and then we have Nvidia. We have the AI hype stronger than ever. I submitted on Saturday my weekly recap. If you didn't check that out, I will link right now in the upper right corner that video. And yesterday I also emphasized that the AI hype and FOMO are huge right now. Right now, Nvidia, look at this. The 10 largest AI-related stocks as a share of the S&P 500 market cap just hit a record 28%. Who are these? Nvidia, Google, and Microsoft. From the mid-50s in 2023, we are now at 28% in 2024. So Nvidia, it's now accounting for 50% of the S&P year-to-date market cap gain. This is insane. And more than insane, it's concerning due to the overconcentration that I spoke about in my videos. And due to this, also Nvidia has just passed Microsoft in market cap to become the most valuable public company at 2.33 trillion market cap. Huge, sorry, 3.33 trillion market cap. Insane. So where we stand right now in terms of technicals, In fundamental side of things, we are seeing weakness in the economy. We are seeing concerns in terms of growth. So basically, in terms of this push from yesterday, we are, let me just clear that alert. Meta is surging right now. In terms of yesterday's big rally, we are now in the upper side of things. And I was quite patient today. I was quite bearish because there's no way I'm going to buy up here. This was the setup that I was watching. I told you yesterday, and in the weekly recap since the weekend, I'm waiting for this kind of pullback on the equities. If I'm not getting that, I'm just scalping. If I was to find an entry down here around 20,000 70s or 80s, I will just swing trade something and things like that, waiting for a trend, a reversal into break for new all-time highs. But right now, I want you to focus on the liquidity swipe and this big 30-minute candle with a long wick. On the 1 hour, we have a huge bullish candle, this one right here. And after that, I was looking for longs. This is the new profile for the contract on September. Remember that we are in rollover week and the open interest in this new September contract is way higher than the previous one. So if you didn't roll, please roll forward your contracts on the Nasdaq and the ES. So this is the volume profile since the last pivot, since this one down here. So basically we are seeing volume below price. So point of control is down here. And we would like to see continuation higher somehow. We don't want to see the market to reject that volume and start going lower, because then this zone of bullish price action invalidates, at least for my strategy. So what I was waiting for, as always, I was looking for this manipulation move. I was today watching this overnight push. I never took any position. And then we saw the retail sales number. Look at this manipulation move. Beautiful. Manipulation move at 8. And then a series of lower highs since the open. So basically at open, I took something that it's been a while since I took a short. And it was pretty decent setup. This was the inverse fair value gap, the push lower, retest, and then a clear stop up here for a 1.4.4 risk reward ratio with 10 points of risk. And the reward was 45 points for pre-market lows down here target. That was my first trade of the day, the short, holding that retest. I was actually having the stop right here in this retest. I was willing to risk 200 if I was to be stopped out. It is what it is, but it really worked. And then down here, this is the zone for the 1 hour long wick bullish candle. And we were leaving behind, look at this, push imbalances and fair value gaps, 2 of them. The first one was my main entry. So basically long here with the stop at this pivot right here. And it was 12 points of risk for 35. I was just willing to test this inverse that was up here at that specific moment. Right now, I removed it. So this was the liquidity that I wanted to clear, and pretty straight and straightforward, and another 35. So 45 plus 35, it's 80 points, $1,600 today, the day before the Juneteenth. So I'm pretty happy because this price action is really difficult to trade. And after that, I'm just watching this consolidation. I was waiting for the action. We got the action. We are still bullish. Why? Well, we have Nvidia 3.26% on the day, making new all-time highs. We have Google trying to break this 45 EMA, and that was my alert down here, the alert that you saw down here earlier. And Meta is also curling off the lows, breaking this, going through the inverse fair value gap. So this is a key spot for Meta. And apart from that, we are seeing quite a decent day. The Russell was doing a wedge breakout, but it never held, and we are seeing lower momentum. Financials are quite good. Actually, XLF is 0.44, and Apple is quite weak, minus 1.28. I have this pivot zone here. I had an alert before. Let's put it down again. And dollar and yields are in the red. Where are we in terms of dollar? We are just in the middle of nowhere land, just in the middle of the zone. There's no edge here. It looks a little bit bullish due to this fair value gap being open and this long weak bullish candle, but the 2-year are continuously being rejected. 4.7 in the 2-year, minus 1.34 today, and 4.2 rejecting this zone. It's quite important. So yields are going lower, treasuries are up, small caps are decent, and we have the typical ones, the AI play continuing higher. So really choppy day, really pretty difficult price action today. If you're in the red, don't worry, because I think it is what it is. I almost got stopped out here and I could just go all over again with this price action. I was waiting for lower. This was a risky trade, but still I focus on my process. I followed my strategy, and I had pretty good 2 trades, one short, one long, and I'm waiting for this liquidity. My recommendation for today is there's 2 inverse fair value gap here and this liquidity. Once we go through this liquidity, the target, the objective is met, and I would not recommend trading anymore. So be really careful. Tomorrow is just a bank holiday. So we are seeing pretty bullish price action, but rollover week, OPEX on Friday, tomorrow bank holiday. I mean, don't risk it. Don't risk it. If you are green, throw the towel, enjoy your profits, and see you on Thursday. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. We are seeing some shorts covering, but I don't think there will be plenty of buyers. So be really careful. Tomorrow is bank holiday. Enjoy your profits. Enjoy your holiday tomorrow. And remember that discipline and risk management are key for your success. Stay safe, everyone, and see you on Thursday.